A lot of retail investors believe that they can time the market. That is the most destructive practice you can ever bring into your investment journey. You know why? Because statistics say this. In a 20-year period, if you miss the 10 best days of the market, your overall returns will drop by 50%. You don't know when the market is going to rise or when it's going to come down. So if you are trying to time the market, there is a great chance that you might miss those 10 best days over the period of time you invest. And if that happens, it means you are going to lose 50% the return of your portfolio just because you are trying to time the market. So that is something I totally would tell you categorically, don't do it. You cannot win. You know where the money is made in the stock market? It's not in the selling. It is not in the buying. It is in the waiting patiently. It's a wonderful and awesome day to be alive because you know why? I feel blessed today. And yes, it's a stylish day. But I realized something that the nature of the economy right now, the way things are going, we cannot keep it stylish today. Anytime you see me come in with this red beret, you know that there is danger on the horizon, all right? Anytime you see me with the red beret, you know that there's danger in the horizon. Hey, but I'm glad to have each and every one of you on the line tonight. And as usual, let me know where you're tuning in from. But if you're one of those who have been investing and following my channels the last many months, I always bring it to you very raw, very clean, very pure, and also very, very honestly, right? And anytime, like I said, you see me with this red beret, you know that we're out there trying to become economically free. And this is a beret that inspired, the person who inspired me is the guy from South Africa. He is the head of the party called the Economic Freedom Fighters, right? So anytime you see me put on the red beret, you know there is something important we have to talk about. But here's the deal, guys. Here's what I want us to hit today. I really haven't done a live stream specifically on the Iran war and the effects it's having on the economy and what you should do as an investor. And so today I wanted to talk a little bit about that, right? Because there is fear on the market, there is fear everywhere, people are panicking, and I just wanted to address a few things. And I hope this is going to help put some calm in you and give you the ability to see things very clearly, all right? And to understand that, hey, you know what? This is just a cycle, and this too is going to pass, like most of the cycles always happen, right? But here's the deal, family. I want you to take a breath, okay? Take a deep breath, breathe in, breathe out. And right now, the news cycle is loud. There is no question. There is war all over. There's escalation, global instability. And when those words show up, generally, when those words show up on the screens, on the news channels, the market react immediately. Of course, the market has been reacting. I know people have even been praying and putting their fingers crossed and trying to see if God can help get us out of this situation. Don't worry, God is God, but these things get worked out in a specific way. And I'm going to talk to you about those specific ways. I'm going to talk to you how to prepare yourself, what to do in this time of great uncertainty, and how to position yourself so you come out a winner a few months from now. Normally, the stocks have been dropping. The oil prices has jumped. People are starting to sell. But here is what we need to do. We don't need to panic because panic is costly. Panic is expensive. No emotional expenses. Financially expensive is the attitude and the behaviors you manifest during times like this. Let me share my screen here. And I just want to share with you one of my portfolios, okay? This is just my portfolios, one of my portfolios on Fidelity, okay? And I want you to take a look here, just to tell you that whatever is happening to you, it's not unique only to you. Whatever the market is doing, it's not doing that only to you, right? But I'll also coach you on exactly how to position yourself, how to make sure you are on the side of historical growth when the market turns around. Now, if you look at my portfolio here, you will see, let's start from maybe the last 1 month, right? Let's look at my portfolio, how my portfolio has performed the last 1 month. Over the last 1 month, my portfolio has dropped by about 28.79%, right? And it has a negative returns of 5.39. All right. Of course, if I am a short-term investor, if I'm a short-term thinker, or if I'm not part of the UNF group like you are, if you're not part of my community, you will be panicking. But if you're part of my community, you know these are indicators that you don't have to worry about because you're in the long game, right? So think about it here. Let's look at the 3 months chart. So over the 1 month chart, it dropped by that amount, so about $117,000. That's fine. Let's look at the 3 months chart. The 3 months chart indicates to me that it dropped by about what? 44,000 something, by about 13%. That is fine. But now realize something, guys. Once I start zooming out, right? Once I start zooming out, you'll notice something magical happen. You'll notice that the long-term horizon is better than the short-term horizon, right? Okay, let's do it this way. Let's keep going here. Now let's zoom out a little bit and see. Let's look at the year to date. Year to date is basically the beginning of the year, the 1st of January till whatever point we are in the year. So let's look at the year to date. The year to date is, yes, certainly, that is certainly the losses so far. We are in March, so the last 3 months is the same like the last 3 months, right? About 8.36%. Okay, let's look at what this portfolio did for the last 1 year. And the last 1 year is basically from this point today to March of last year. All right, let's look at what the portfolio did. Okay, so the portfolio actually returned 32.46% in the last 12 months, right? So from this point to going back to March of last year. Let's go out 3 years. 3 years, what is the total return of the portfolio? 103% in the last 3 years. So if you divide that by 3, you average it, it will be somewhere about 33, 34% or something, right? A year. Now let's go out 5 years, 87% returns, right? So here's the deal, guys. Why am I sharing you this? I'm sharing you this not only I try to be very transparent with everybody. I don't say things I don't do. But most importantly, I'm sharing it to let you understand that if this is happening to your portfolio, you are not alone and there is no reason to be panicking. Do you see me looking panicked? Do you see me looking like the world is coming to an end? You know why? Because I understand the nature of the game. I understand the patterns of the market. I understand the rules under which the market works and what long-term investors need to do in order to come out ahead. Hey, if you make good money but you're tired of living on autopilot, watching your income disappear every month with nothing substantial to show for, this is where you finally learn how to turn income into assets, assets into growth, and growth into long-term wealth. You see, most people never get there because they lack clarity and strategy. They earn, they spend, and they hope for growth. But hope alone is not a wealth-building strategy. Because if you're tired of wondering where your money went each month, or frustrated that your investments are not working as hard for you as you would like them to work, then this is for you. The Wealth, Clarity, and Legacy Blueprint webinar should be your number one priority. You know why? Because you're going to get a clear picture of your finances. You're going to learn how to structure your money in such a way that growth and protection becomes a natural outcome of that investment. You are going to see how to start investing with very low capital and walk away with a 90-day wealth plan you can actually execute right now, not tomorrow, not next week. I will also get you some worksheets and you have access to the replay of their training so you are not rushed and can implement properly because this takes a little bit of time. By the end of this 90-minute live session, you are going to walk away with clarity, control, and a practical roadmap to make your money work for you so you can stop guessing and start growing your wealth. If this makes sense to you, click the link in this video description. Save your seat because there are very limited seats at the Wealth, Clarity, and Legacy Blueprint webinar and start becoming the financially confident, in control, and growing version of yourself you've always aspired to be. Your clarity begins today, and you know what? Your legacy starts right now. So I will see you on the inside. So here is the deal. As retail investors, you must understand something. And you are a retail investor. Retail investors are people like you and me who buy individually for ourselves, right? In the other part is called the institutional investors. These are companies, investment firms, JP Morgan Chase Investment and all these other investment firms. What happens to retailers is 90% of retail investors lose money during crisis or wars. And you know why? It's not because anything changed about the fundamental companies and assets that they bought. What changed is their emotions. What changed is the fact that they panicked and sold at the loss. What changed is the fact that they made emotional decisions, not logical decisions. What changed is the fact that they never had a strategy. They never had a long-term plan for their investments. That is why I talk to you about these things all the time, because you will not hear it once and it becomes second nature. It only becomes second nature when you hear it over and over again and practice it, right? So I don't want you listening to me to be one of the 90% retail investors who are going to lose, because what retail investors typically do, and the ones who are not educated, the ones who don't understand how investing works, what usually happens is simple. In a few months from today, right? Think about it. Right now, all of what they are hearing, the war is coming, the market is going red, they panic and they sell their stocks. These are assets that they bought, let's say, for $100 and they're selling today at $50, right? And now what happens is that that same company you are going to sell for $50 today, a few months from today, it would have risen back to $100. And at that point, you'll be hearing the news telling you the market is green, things are good, life is wonderful, the stock market is on fire. And then you rush to buy that same asset for $100. So which means initially, maybe you bought the asset for $70, it rose to $100, and then it dropped to 50. You sold it at 50, at the $50, at the $20 loss, and then you go back again and buy it now at $100, which means overall you've lost $50 in that transaction. I don't know if I make sense. And all of that is because you panic. All of that is because you don't understand how these things work. All of that is because you haven't taken the time to educate yourself on how it works. All of that because you don't have a long-term strategy and you're working on the way you feel. So I want to help you figure out a strategy that is going to guide you, especially during this time, right? You have to understand that oil spikes market indicator. What that means is that historically, the data tells us that anytime oil rises by 5% for 2 consecutive days during geopolitical events, the stock market returns averages 22% over the next 12 months. Guys, pay attention here. I want you to listen to me and listen to me very carefully. Anytime during a war or political crisis, when the prices of oil increases 2 days consecutively, 98% of the time the stock market rises in the next 12 months by 22% averagely. I want you to understand me on that one, guys. So what that immediately tells me is that, you know what? It is simple. I have an 83% chance that over the next 12 months, just because at the advent of this conflict, when the US attacked Iran, oil prices rose by 5% for 2 consecutive days. So I have an 83% chance that in the next 12 months, my portfolio is going to rise back by an average of 22%. So what that tells me immediately is, Gustav, the only thing you need to do is to buy more of the assets you believe in, because they are selling at a discount now. Other than that, there is no need to panic. Just wait it out. Just wait it out. You are not going to fight in Iran. You are not going to advise the president. He doesn't need your opinion. You cannot do nothing about it. So just wait it out, right? Because you must understand something, guys. When oil spikes during geopolitical conflict, markets historically perform very well afterwards. That alone should give you a certain amount of reassurance. That alone should tell you that if you were planning to go sell your stocks tomorrow or the next week, don't do it yet. Now, of course, it depends on the kind of companies you own. Hopefully, they are strong companies that you know are proven, right? There are other videos I do talking about how to judge companies before you buy them. That's a different story we'll deal with another podcast. But listen here. Market timing reality. A lot of retail investors believe that they can time the market. You can buy now, listen to the news, think about the day that you think things will go down the market might go down. You sell right before the market goes down, and then you buy after the market goes down. Let me tell you something. That is the most destructive practice you can ever bring into your investment journey. You know why? Because statistics say this. If you miss the 10 best days in the market over a 20-year period, it reduces your overall return by 50%. I don't know if somebody is feeling me here. And this is not me saying, this is what studies say. These are experts who have studied the stock market for 50, 60 years. In a 20-year period, if you miss the 10 best days of the market, your overall returns will drop by 50%. So what that means is if you are trying to time the market, you don't know when the market is going to rise or when it's going to come down. So if you are trying to time the market, there is a great chance that you might miss those 10 best days over the period of time you invest, which generally are advised 10 to 20 years. And if that happens, it means you are going to lose 50% of the return of your portfolio just because you are trying to time the market. So that is something I totally would tell you categorically, don't do it. You cannot win. Even the experts on Wall Street cannot time the market. You know where the money is made in the stock market? It's not in the selling. It is not in the buying. It is in the waiting. It is in the waiting patiently. A lot of you listening to me right now are probably working on jobs you don't love, and you've worked in those jobs for 15 years. How come you've been patient with that? You can't be patient with your investments. How come? How come you've been patient with a lot of things in your life, but when it comes to your investment on the stock market, we're in such a hurry to sell each time the market is down, instead of loading up more and accumulating more of those assets, knowing that you are getting it at a discount, right? That is the name of the game, guys. So let me say this here. Let's take an example of the Gulf War in 1990. When Iraq invaded Kuwait, the market dropped sharply. If you remember, go back historically, the S&P 500 fell about 17% within a few months. Investors panicked, oil prices spiked. But within 12 months, the market recovered. During the Gulf War period, the S&P 500 delivered about 11.7% annual returns, even in the middle of the war. What that tells you and me is that the pattern is the same. It doesn't matter. Let's look at the Iraq War in 2003. Same thing. Immediately, the Iraq War started in 2003. The market panic. In retail investors who are not experienced, who don't know how these things work, they start selling their shares. And what happens? Naturally, because supply is higher than demand, prices keep going down, right? But once the conflict began and uncertainty declined, the market now started rallying, because the market realizes that, hey, this conflict now is in, it might go for a while, and they price that into the stock prices. And so the market starts picking up. Within a few months, the S&P 500 started producing again another 13.6% in gains. So uncertainty is often worse than reality, guys. The perception of a political conflict creates a lot more panic than what realistically it is. So I want you to keep these key points in my mind. Think about even recently the Russia-Ukraine conflict. I think that's what 2022 or 2023 that started. Same pattern. Markets initially dropped when the war started. Oil prices rose. Prices of stocks plummeted. But many markets recovered a few months after that. Economic activity continued. Businesses continued. Innovation continued. If you think about that time till today, NVIDIA has grown significantly. Microsoft has grown. Apple has grown, even though the conflict is still going on, right? So don't get distracted, right? This is what the typical market patterns are during war. The first 10 days, markets drop generally about 5 to 7%. During wartime, the market within the first 10 days, it will drop by 5 to 7%. Around day 30 to 35, the market starts stabilizing. Around then, 12 months later, markets historically recover 8 to 10% on average. So markets price fear quickly, but return to fundamentals. I don't know if you understand me here. Retail investors like you price that fear for too long a period of time. It takes the market a few months, and they price in the fear and they stabilize, and then the market starts moving in the opposite direction. So if you are running now based on what it is, know that you are making a mistake trying to panic or run on your emotions. Let me talk a little bit about the concept of the bull and the bear market, right? The bull market is an extended period of the market rising over a period of time. I think it's usually over 4 or 5 quarters. A bear market is the reverse, the market dropping over a certain number of quarters, right? And let me give you the historical facts about the bear and the bull market. This is going to guide you so that way you have no confusion in your mind. Bull markets, which generally is a market when the stock market is rising and people are making money, companies are growing, stock prices are rising, returns are green, the market is green, you look at your portfolio, is green. Bull markets generally average 4 to 5 years. Are you paying attention here? Bull markets generally average 4 to 5 years. And you know what bear markets average? Bear markets average 10 months. But because the human mind is so affiliated to pain, because the human mind is so scared of discomfort, they give more attention to the bear market than the bull market. So in a period of 6 years, a bull market will run for 5 years and there will be a bear market only for 10 months. Now, the 10 months is important because it is in those 10 months that the intelligent investors like you, who are used to the information I share with you, who are taking advantage of this knowledge and using it, you are not going to do what 90% does, which is trying to sell their shares. You are going to instead buy more of those companies you like, trust, and have researched, which are now at a discounted price. Because you understand that the bear market will not last for too long, that the bear market will only last for 10 months, but the bull market will run for 4 to 5 years. So you will be making money for 4 to 5 years, and then there's a 10-month period that you might lose money if you do the stupid things. But if you do the right things, you're not going to lose. You are instead going to make more because you buy more of what you already own at a discounted price. And when the bull market starts again, then the prices go up and your portfolio rises and you make more money. That's why for those who watched the beginning of this live stream, I shared my portfolio. That's why I'm not panicking. Right now it's down $117,000. I'm not panicking. I know it's going to be back above that amount and even more in the next few months because the bull markets generally are longer than the bear market. So it's important to understand that statistical fact, right? Because it gives you an ability now to work not on how you feel, but what the statistics of the market says. So you need to understand something. Short-term volatility is emotional. It creates a lot of emotion. And the reason why is because people invest the way they feel. So a majority of people will go ahead and start reacting how they feel. That's really what causes the short-term volatility. But long-term growth is mathematical. Long-term growth has nothing to do with emotions. Short-term volatility, yes, people feel one way, they act another way, whatever. Long-term growth is mathematical because these things have all been brought down into a science, right? Over long periods, we know that the stock market delivers about 10% averagely annually, whether through wars, whether through recessions, whether through crises, whether through pandemics, whether through any kind of circumstance. We know that for a fact. And because you know that, even when there is panic, you have to go back to what you know that is fact, not what you feel. What you know that is fact. Because if you take a historical example, let's say, for example, someone who invested $10,000 in 1990 during the Iraq War, I am saying here, if you invested $10,000 in the S&P 500 in 1990 during the Iraq War, where we are sitting today, that money would be worth $210,000 with dividends reinvested. And that is not because crises don't happen. Can you imagine the volume of crises that have happened between 1990 and today? Yes, it is 25 years or something. Am I right? It's 25 or 35 years. Something like that, right? 90, 2000, 210. So 35 years. Yes, a lot has happened in that period of time. But you know what is most important? Stayed invested. You didn't move. The only thing you did was buying more of the things you trust. Now, you have to understand something. There is a difference between the way retail investors behave and institutional investors. A retail investor are individuals like you and me who can just open an account on Fidelity, on Vanguard, on Robinhood, and just buy assets, buy stocks, buy ETFs, buy index funds. Institutional investors are companies like JP Morgan Chase, like Wells Fargo, Institute, BlackRock, all these investing companies, right? These are companies that have the manpower, they have research professionals, they have mathematics PhDs, they have statistics professors working for them. These guys spend volumes of millions of dollars in research. That is why they behave very differently during geopolitical crises. During geopolitical shocks, there is a major difference between the way retail investors behave and institutional investors. Generally, institutional investors, retail investors panic, like I've said. Institutional investors don't act on their emotions. They act on statistical, historical data. If you see institutions dumping a share, know that they have statistical reasons why they are doing that. But here is even the advantage institutional investors have, especially during this time when people are panicking. Then know that when we in retail investors like you, panic, you start selling your shares. And because you're selling, it creates the prices to go down. And when the prices go down, what happens is that now they can even accumulate more for themselves and their investors that are investing through those companies. So they become richer. They become stronger. That's why even institutional investors, every so often, they create panic. I can tell you this, institutional investors love bad news because when the news channels carry bad news, retail investors panic and sell. Institutional investors and the small handful of retail investors that are smart, the 10% that know the things that they need to do like you because you follow this channel, you go ahead and take advantage and you buy, right? What happens generally, therefore, during this time of panic is that don't freeze, don't stop investing. That is why one of the most powerful things you can do to yourself is to automate your investment strategy. Because when you automate your investment strategy, and by the way, if you don't know how to automate and do all of those things, I'm hosting a free masterclass on Thursday, okay, at 7 p.m. Central Time. I will leave a link down in the video. It is free. Just click register for that masterclass. I'll be talking about these different things. I'll be talking about how to gain clarity on how to invest, how to automate your investments, all these different strategic things. So join that masterclass. You're going to learn a lot in that masterclass, right? But let me tell you something. During times like this, don't freeze. Continue buying the assets that you believe and trust. That is why if you are automated your system, it just buys without you thinking. So it doesn't permit your human emotion to come into play, right? Don't chase assets that are already rising. For example, I saw a lot of people trying to go after oil stocks, trying to go after oil companies. To me, it's a mistake because the oil prices right now have already spiked. So they are selling at some of them at their all-time highs. What you are doing, therefore, you know that you are buying an asset that is going to drop. Because when things stabilize after the conflict, the heat of the conflict has passed, the oil prices are going to drop again, right? So you must understand you don't chase during this time. During this time of political conflict and war, don't chase any stock. If you like a stock you wanted to buy, the price is already above the price you were planning to buy, don't chase it. Because if you're chasing, you're going to buy high and eventually you might end up selling low, right? So let me say this, guys. Fear destroys clarity. Clarity is the thing that really protects wealth, okay? So stay calm. I want you to stay strategic, stay long term. We are not trading headlines. Remember, you are investors. You are not traders. You are not there to trade the news. You are not there to show that you know the news or you can pontificate what is going to happen. That's none of your business. Don't worry about the White House. Worry about your own house because you are building a legacy. You are building a life that you can live and then you can leave for future generations when you are leaving, right? You must understand that, yes, truly you are enough. Because moments like this are exactly why guidance matters. Because when markets become emotional, disciplined investors become strategic. If you want help reviewing your portfolio, structuring your investments, or building a long-term wealth strategy, you can book a private one-on-one call with me. And we'll get on the call like I've gotten on with hundreds of other people. I've been able to build specific customized plans just for your situation and put you on the track to build wealth over time for you and the generations to come after you. I hope this live stream has been of value to you because you know what? We are going to walk through your situation when you book that one-on-one call, your goals, and we are designing a plan based on a framework that I've talked about. You can book that session using the link I'll drop down in the comment section. But if you're not ready yet, I will invite you to join my community. Subscribe to this channel. If you're on YouTube, if you're on Instagram, on Facebook, follow me because you must understand something, guys. If you came from a background or from parents who were broke, it is not your fault. But if you end up broke, it is your fault. I want us to challenge ourselves as much, right? I want us to challenge yourself. Because remember, I'm not talking to you from a high horse. I am also challenging myself when I'm saying these things, right? Because we share insights in this community. We share strategies. We support you in building disciplined wealth and long-term legacies. Because remember something, guys. We are not just reacting to markets. We are building ownership. This is the era of ownership. I have a movement within my community called the era of ownership movement. This is the time when all your focus should be on owning something because it's through ownership that you build wealth and you build a legacy. I will see you on the inside. And I hope this live stream has been very valuable to you. If it's been valuable to you, please feel free to share it with other people, right? Feel free to share the link, recommend me to other people that you know, and even to your own self, right? My important thing to me is for you to take advantage. Don't just come and listen, feel good, feel inspired, feel motivated, and go home. When you listen, implement one thing. And that's how you start building your capacity slowly but surely. And you know what? I will see you tomorrow night again for another live stream at 7:30 p.m. Central Standard Time. Until the next time, I want to remind you of something. I might not know you personally. I might never have a chance to meet you in person. But I want to say there are circumstances that might have happened in your life that has tried to talk you to believe that maybe you're not smart enough, you're not intelligent enough, that you really don't belong to where you think you belong. I want to remind you that you are enough, that it is a lie, that whatever circumstance, whatever story somebody told upon your life or your destiny, it is false. Because you know why? You are smart enough, you are capable, you are open to relearning, you are open to rewiring the spirit and the mindset that has gotten you this far, because you need a different mindset to get you to the next level. And I want to remind you that as you go out there, be well, be blessed, and by all means, never stop being a blessing to somebody. And until the next time, I will see you in the next live stream. Take care of yourself and bye for now.